Good day. Welcome to the next episode of the Two Tokens Studio. In these episodes, we talk about tokenization and how tokenization is changing our society and how we do business. With me today is Dan Liebau. He's the founder of a Singapore-based Lightbulb Capital, and he's an affiliate faculty member of the Singapore Management University and a lecturer of the Rotterdam School of Management here in the Netherlands. He is also a review editor of Frontier's Financial Blockchains in London, and he's an expert on tokenization. So I'm very much looking forward to hearing all your thoughts on tokenization, Dan. Welcome to the show.
Thank you so much, Mark. I'm very much looking forward to having the conversation with you today. So thank you for having me. I appreciate it.
Perfect. Well, let's dive straight in because there's a lot to talk about. Here in the Netherlands, recently we see that tokenization is slowly being adopted by the Dutch government. And the Dutch central bank is investigating a digital currency. Could you please provide us with some insights on how other jurisdictions in the world are approaching tokenization?
Sure. I think, I say sure, but it's very difficult to do because it changes on a daily basis, right?
Yes, of course.
So I want to pick out, I want to say a few things about regulation overall before we go into particular jurisdictions. Okay, so what we have to understand is that some of the laws that are put in place to, some of the pieces of regulation that are put in place to govern financial services are there for a reason, right? And so just because perhaps we are not all aware of them, it doesn't mean that they're bad, right? And I think we always have to look at impact and also probability of something going wrong. So even though something might perhaps have very low probability, if the impact is high enough, it still makes sense to have some sort of regulation around it, right? That's just the thing. When people have the opportunity to cheat, some of them will cheat, right? So
Fortunately, that's the case, yeah.
Yeah, that's the case. But basically, second thing I wanted to mention is there's lots of different types of regulation, right? So we can talk about anti-money laundering or counter-terrorist financing or know your customer regulation. There's also in most jurisdictions, there's a whole law around securities, right? And how that is supposed to work. Then we have regulation that basically covers how financial intermediaries and insurance companies are supposed to behave, right? And then there are other things that touch blockchain and tokenization, for example, tax law, right? And it's important, I think, to understand for each of us in the ecosystem, which piece of regulation actually affects us. Because if you look at the totality, maybe you go, oh my God, this is a lot, right? But then perhaps based on what you're actually doing, there's only one portion that affects you, right? So I think that is something that I wanted to highlight before we go into the details. But let's talk different countries, okay? So I'm going to randomly start with Switzerland. So Switzerland, very interesting, I have two updates for Switzerland. One is the law of company registration in Switzerland allows for the cap table of a company to be maintained by the issuer of the shares, by the company itself, right? So that's fantastic because in some countries that is not the case, right? And if you are able to maintain that yourself, then you can put it on blockchain, right? And then there are companies like, for example, Daura, who facilitate that whole process, right? In jurisdictions where that is not possible, you always have to interface with the government database that is obviously not on blockchain, will not be on blockchain for a long time. So that is something that the Swiss have figured out quite well, I think. And then you combine that with the recent announcement that two companies have gotten full banking licenses, right? Signum and SEBA. And that is quite interesting because basically fully licensed bank is no special license for any sort of crypto related activity. It's just a regular banking license. Obviously, the companies are put together by very experienced financial services people that understand the old regulation, world of finance, but also how tokenization works and how digital assets work. So I think that is the sort of quick overview of Switzerland, which I think is very encouraging. If we move over to perhaps the United States, in the United States, there are many different regulators, which makes it quite complicated sometimes to navigate. But I only wanted to pick out the updates to the securities law and its exceptions in particular to do security offerings, right? And I'm not talking about security token offerings because it's all encompassing. So whether you issue a token or not is not relevant. But basically, number of changes to this regulation that allow issuers to raise more money than they used to before. And also some changes on how accredited investors are assessed so that the process is basically simplified. So that is something brand new, came out in March 2020. I was just talking to my lawyer friend earlier today and then got a little bit of an update. So that's encouraging. Another interesting jurisdiction that I want to talk about is Liechtenstein, not too far away, right? Liechtenstein has a blockchain act, and that blockchain act has a very, very incredibly interesting feature. It basically says that records recorded on blockchain supersede records not recorded on blockchain. So if you think again about the company registry, for example, if you issue your shares on the blockchain, then that record of the company shares supersedes any other record, right? And that is something that is very fundamental to, I think, what we want to call natively digital securities, right? Which is something that we're a little bit further away from, because right now, if you talk about a security token offering, it's basically a digital representation of a security. But for the next generation, laws like the one in Liechtenstein would be quite crucial. So these are some of the jurisdictions that I find interesting, but again, I can't cover all of them because I'm not a lawyer and there's way too many of them. Yeah,
fair enough. But I think it's very interesting to see that different jurisdictions have different approaches to tokenization. What does that mean for startups? Who are almost by their nature or global from the get-go within the tokenization ecosystem. How do they have to navigate the different jurisdictions when they want to operate their business?
Yeah. So I quickly want to highlight this concept that was researched by other management science scholars called the liability of foreignness. I'm not sure if you're familiar with that, but basically what it says is, it says that if a company tries to operate across borders, the risk of it failing immediately shoots up.
Yeah.
Right. So this is something that's very interesting to consider in the blockchain space, because we talk about decentralization and we talk about global teams and all of that. I'm a big advocate from trying to start something off, in one office, possibly with everyone involved around the table. So if you ask me, how does that affect startups? Of course, it's quite complicated, right? Many different jurisdictions have different views. A security in one country is not a security in another. A utility token is accepted in Singapore, is not in the US. It's very difficult. So if you want to reduce this complexity, ideally, you try to make it consistent, at least for the first while you sort of build your minimum viable product and assess the viability of what you're up to.
So basically, what you recommend tokenization startups is to behave like any startup, is start small in one jurisdiction and grow from there.
I think that makes a lot of sense because it simplifies things. Yeah. I don't see the value necessarily why your CTO has to be in India and then you are in the Netherlands and then your sales head is in the US. Anyone who's worked in a global organization knows that working across time zones is incredibly tiring, right?
Yes.
And while it may sound very cool to be global head of something, it's also very, very exhausting. So if you can avoid it, I would suggest to avoid it for now.
Fair enough. So you live in Singapore. Which in the past years we have seen the Singaporean government has taken a quite forward-looking approach. Yeah. What are some of the benefits as well as the disadvantages of the Singaporean approach to tokenization? And what, more importantly, what can other jurisdictions learn from what Singapore has done?
So I have to say that I continuously am astounded by how well the Monetary Authority of Singapore manages change, right? And then obviously the sort of rise of blockchain, tokenization, and everything that comes with it is a big part of it, right? So I think that the couple of things that are quite interesting when you look at the process or the thinking of the Singapore government. So one is, we don't always have to be first, but we want to be very fast second, right?
Yeah.
And therefore, they observe very, very carefully what everyone else is doing, but also how the industry on the ground is operating and evolving, right? And I think every regulator should have quite a bit of budget allocated to understanding these dynamics. So that's very important. Something that plays into this is the concept of a sandbox. I think the FCA in the UK also have a sandbox. Other countries are also setting up a sandbox. And I think if the rules to get into the sandbox are reasonably simple, then it's a very nice concept to try out new business models.
Yeah.
And you think about tokenization, pretty much any project is a new business model that hasn't been operating before, because it cuts out intermediaries and so on. So I think that is a key concept. And I know that in Singapore, for example, we have a security token exchange that is in that sandbox at the moment. And I wouldn't be surprised if after they've gone through all the hoops, they will then get a recognized market operator license that will then enable them to create a marketplace for security tokens here.
If I can just respond to that, because that's fascinating to hear. Because we've with the Two Tokens project, we have done several roundtables. I think at the first roundtable, the first thing that came out of it is that we need sandboxes here in the Netherlands, and we need environments, digital environments for companies to play and to experiment. And I think it's great to see that Singapore has really taken a first mover approach to offer such a sandbox for startups so that they can experiment, and that together you can learn from it.
Yeah, no, I think it's great. A few other things that I find quite fascinating in Singapore. So one is, while the US rushed into trying to regulate utility tokens, Singapore didn't, right? And they just said, okay, let's just try to understand what's going on there, because what we don't want to do is stifle innovation if it has such a large potential impact on society. So what they did was they highlighted to the public that buying utility tokens comes with considerable risk, and that you should really think twice and thrice before you buy a utility token. But they didn't say you're not allowed to issue them, right?
Yeah.
At the same time, and this is fascinating, they have securities law. And if something looked like a security and then people tried to offer it as a utility token, then they would go after them, right? With like very strongly. So I think it kind of goes to show that for security tokens, for example, there is a piece of regulation in place in most countries, right? At least as of now, where security tokens are digital representation of investment products that live on a blockchain. The other thing that I think is quite interesting is only recently they have introduced what we call the Payment Services Act. So then suddenly they have roped the handling of utility tokens and the exchange, for example, into a wider piece of regulation that also looks at other wallets, for example, your wallet that you have in, I don't know, an app similar to Uber, for example, right? Or other digital, where digital money is involved. And with not having a separate crypto regulation, basically, they have created a framework that then enables for crypto to thrive, right? Because it's just one out of 6 other things, and not the only one where somebody would say, well, we're not going to implement that regulation because it's crypto and we don't do crypto, right? So other companies that are involved in payments, for example, will have to live by this Payment Services Act. And then the regulator has created an opportunity to also look at the digital asset space at the same time. So I think these are some of the very interesting things. And I'll finish talking about Singapore with the tax law. So because there's very clear distinction between what a security is and what a utility token is. And basically, a utility token is more looked at as a consumptive right for a product that has to be built. Products are liable for GST, right? Goods and services tax. Mm-hmm. So therefore, utility token transactions come with GST. Now, while some of the issuers might not like that, it's actually a very consequent thing to look at, right? Because it confirms that the utility token by nature is not a security.
Yeah.
Right. So I think these are some of the developments that I find quite fascinating here in Singapore.
I think it's very interesting to see how how innovative Singapore is looking at all the developments around crypto and tokenization. If we compare that to the Netherlands, where we just have new regulation, the AMLD5 regulation, which came into effect last week, I think, it's the end of April, which basically states that if you are a crypto company or crypto startup, or you are either having a custodial wallet where you store the tokens on behalf of your customers, or you're involved with some sort of an exchange of tokens, you need to have a license from the Dutch central bank, which comes at a cost of probably around 30,000 something euros to start with. What do you think that the effect would be of such a regulation on the Dutch startup ecosystem?
I mean, kind of goes back to the point I was trying to make in the beginning, right? So, terrorist financing is a serious problem in the world. And I think we are doing right to understand payment flows, especially if they interact with the fiat system, because that's where we have a bit of a heightened risk for people to get money in and out and from A to B where they are not supposed to, right? Yeah. So, if I want to create a payment services sort of a company, and then I can't pay the $30,000. I don't know. I mean, I have a contrary view a little bit, and I've seen Simon's views, and I respect him. I've met him at the previous event, and he has massive understanding of especially the Dutch financial services history and current systems and regulations. It's amazing. But in my mind, I think if you want to engage in financial services, then some of these things might actually be good for the greater good. And perhaps a concept like a sandbox, for example, would help people at the very, very early stages to try out and maneuver with the technology. And then once they perhaps raised a little bit of money, then the $30,000 is perhaps just cost of doing business. I mean, that's how I look at it at the moment.
So basically, you say that if the Dutch government would, they impose a strict regulation, they should also open up a sandbox environment so they startups can first experiment and try out before they know that, okay, now I know how to run my business, and now this 30,000 something euro is, as you say, cost of doing business.
Yeah, I mean, one of the things that I wanted to highlight, I think there are a few important matters for everyone in the blockchain and tokenization ecosystem to think about a little bit more. And if you give me a minute, I'd like to go through them because I think they're quite important. So the first one is, how does my personal business have to deal with the regulation that is in place, right? And if you just close your eyes and say, I don't want to deal with it, and the regulator is so bad, and why are they throwing us all of this? I don't know. I mean, there are some industries that are more regulated than others. If you really hate regulation, then maybe you have to play somewhere else, and there's nothing wrong with that, right? So that's kind of one thing. Then the second thing is also, to understand exactly with all this new innovation that we're working with, right? Who are the players involved in what I'm trying to build, right? If I'm trying to build, an exchange for security tokens, for example, then I need to understand who are the buyers of these tokens, right? It's always about the buy side. I'm the sell side, and there are lots of people wanting to sell all the time, right? Who's buying? In detail. If it's institutional clients, which ones? Is it PE firms? Is it public markets type of people? What's their investment thesis, and how does my product fit into the investment thesis? Understanding that, I think, very, very important.
Yeah.
A few other things that I kind of come to mind in the tokenization part of the equation, right? I want to split it by utility tokens and then security tokens. I think utility tokens often lack the economic incentive design that really works. So if you look amongst the 7,000 issuances that we have right now, very, very few of them have actually thought through from an economics kind of background why this token has some sort of value as the product gets built out, right? So spending more time on that is very important, right? Because remember, utility token is a consumptive right for a product to be built. It's not a mechanism to just raise money, right? Because everyone who is who reads the prospectus or who reads the utility token agreement, the buyer's agreement, will understand that they want something back, right, in return for the for their capital. Similarly, I think on the security token side, we have now, I'm doing a little bit of research right now on security tokens. So we looked into the whole success factors and so on, and we realized that there's so many different types, right? So trying to structure a security token offering so it's attractive for somebody who wants to buy it is also massively important, right? And we can already see trends that if you allow for more rights, for example, then your chances of success are higher, right? Yeah. So these are all things that we also want to discuss in that online masterclass that we're going to do with Two Tokens in a couple of weeks, I think, to kind of dive a little bit deeper into all of these sort of design questions that we have in the beginning. And I think that's where alignment of interest between the issuer and the buyer plays a very central role.
Yeah. Well, I think that's a fascinating discussion that you shared with us, because it's the whole tokenomics is so important to get to make your token useful and having a reason to exist, actually. So thanks for sharing that. And I think indeed you're giving a masterclass later on in a couple of weeks. So if you're interested in learning more about tokenomics, feel free to subscribe and to join the masterclass. There's more information on the twotokens.org website. One final question, Dan. You're doing a PhD on emerging technologies in the financial markets. What do you think will be the impact of tokenization in financial markets?
So it's interesting, right? Eventually, the whole security token movement came out a little bit of the utility token movement, even though they're very, very separate and different things. And then, part of the issuers obviously continue to be startup companies. But I see massive opportunity for the use of blockchain in the public markets of today. So I find it very encouraging that a number of stock exchanges around the world have already started to think about how to change their infrastructure to effectively, have a dual proposition. So that people can list their company, and then if some of the investors want to hold their shares in a blockchain wallet, they can. And if they want to hold it in the central depository or with a traditional custodian, they also can, right? That's quite a powerful proposition, because not everyone is, at the same sort of level of maturity when it comes to this topic. So some of the things that I really like about using blockchain in public markets is, for example, the freeing up of capital that right now is stuck during a T+2, T+3 period, right? Where basically we have two very distinct moments in time. One where the execution happens on a sort of central order book level, and then one where the trade is settled, right? And that can take 2 to 3 days. Yeah. So as we know, in the blockchain world, there is pretty much instant settlement, right? So it's the execution and the settlement is the same thing. And I think that can bring a lot of benefits, But at the same time, and this is also something that I want to talk about a little bit in the masterclass, is there are some particular risks that we also have to understand when we want to use blockchain technology for these types of things, right? So, for example, there is fork risk, right? So the fork, a group of developers, takes a copy of the code, changes it a little bit, and says, this is now the new Ethereum. And then if you don't like it, well, you're stuck with the old one. So what does that do for security issuers, for example, right? If suddenly the key functionality that you need is in the old version of the blockchain, and then everyone else moves on with the new one, right? So there's a risk, and I think if I was a issuer or a bank, I need to understand these risks very clearly to make a good choice when I choose my blockchain protocol, right? Another one is from computer science. There's this problem called the halting problem. And the halting problem basically says that a Turing complete machine doesn't really know whether it can, whether a program really finishes ever, right? So when you think about regulation that BIS and IOSCO brings out, and it talks about principles like finality in settlement, these things have to be discussed in quite detail, because I think if you have a settlement process that is reliant on a probabilistic consensus algorithm, right, like most blockchains are, then how final is it, right? And when is it final? When is it, like, how many confirmations do you need? And these kind of things are all technical details, but are really relevant for adoption in the broader space.
Yeah. Well, I think that's another fascinating discussion on how tokenization is impacting financial markets. And I think we as in the financial markets, we know the various types of risk: credit risk, market risk, operational risk, whatever risk. But there's a new risk now with thanks to tokenization, and that's fork risk and risk. And I really like that, and I think that a lot of organizations should be aware of this, because it can be have a lot of consequences for your business. With that, we've reached the end of the episode. Dan, thank you so much for joining. It's been an absolute pleasure, and I really enjoyed your insights, and I hope the viewers did as well.
My pleasure. Thank you very much. Thanks for having me. Really good session. Thank you.
Great. Thank you very much. This was it for the next episode of Two Token Studio. If you want to read more information about Two Tokens, go to twotokens.org, or you can follow us on Twitter, Facebook, YouTube, or LinkedIn. Thank you for watching, and see you next week on the next episode.